Okay, what is up, traders? What's up, tycoons? For today's video, we're looking at ticker symbol VTNR. This is Vertex Energy. We're looking at it on the daily chart. This was a viewer request, so if you enjoy these viewer requests and you want a channel where your tokens, your cryptocurrencies, your stocks can be broken down with some unbiased TA, make sure to just comment down below and I'll make a video on it for you guys as soon as I can. We're going to go over a lot. We're going to learn a little bit about Elliott wave cycles, the major Fibonacci retracement levels, the 61.8, 50%, and 38.2, as well as take a look at the MACD to spot potential exit signals. So that way you can avoid a potential big crash in the stock. All right. Now, the first thing we're going to look at is this blue box here. This is known as a gap. Okay. So notice how there's candles right here, and then the immediate candle next to it comes all the way down here. This is what's known as a gap on the daily chart. These fill about 90% of the time. So the question isn't so much if it's going to fill. The big question is when is it going to fill, right? It could take months and it could take years. But if you chart these things up, you can you can potentially play the gap fill as it's happening, right? Now we came up and we started to fill a little bit of the gap. We came up to this level, but we really haven't filled it, right? If we zoom in a little bit more, what we're seeing here is actually going to be a potential bearish setup known as an inverse cup and handle. Now we haven't gotten it, okay? We have our cup right here and we've started to form a handle. So if we pull back and come and retest this level right here, this is going to be our breakout level to the downside. It's 540. So you need to be cautious if we come down to 540. There's a big potential that if we break below there, we could head down to these three support levels of 480, 449, and 404, right? That would give us a clean ABC move to the downside, right? A three-wave pattern to the downside. Now, we'll go over these waves real quick, just so you guys can kind of understand. If we zoom out a little bit, all right, and we go to really where this downfall started, you see that this gap down originally occurred on earnings, right? So something happened on their earnings report that caused the stock to really tank and have a big drop to the downside. But what this was this was really just a clean ABC move to the downside, right? So if we take a look, right, here's our A wave down right here, then we have a B wave up, and we have a C wave down. Okay. Now, your B waves are, if we zoom in a little bit, these are going to be what's known as corrective waves. Okay. And so you're going to see a smaller ABC in there. Okay. So if you look, we have our A up, our B down, and then our C up, and that completes our corrective wave. Okay. We'll change that to green, and then we'll also come here and throw on our Fibonacci's so that way you can understand. And if you take a look, right, from the swing high to the swing low, so that's what we've just connected here, right? We took our swing high, connected it down to the swing low. See, we had an impulsive move to the downside. We had an A, B, C correction up near our 61.8% retracement level. The reason you use these three levels is because nothing moves in a straight line up and nothing moves in a straight line down. You get a move down, retracement, continuation lower, or a move up, retracement, continuation higher. When you break through those retracement levels, that's when you can spot a possible reversal, right? And this has happened multiple times. All right. If you take a look over here, we got an ABC correction wave back to the upside again. Right here, we get a ABC after we completed, okay, our C wave down, right? So we saw we had the move down, we got an ABC correction up, then we came down, we got our move to the downside, and then we got an ABC correction up. And look at what we've done. We possibly could be starting our next leg down, okay, which would take us again to about 404 potentially. If you take a look at what we're currently going at, we have our swing high right here, we have our swing low, and so we have our major three retracement levels up above. These are the resistance levels we have to break out of, right? So we already have an A, B, C. We already have a three-wave structure to the upside, and we're facing resistance right at our 50% retracement level of 7.43. So that's a very important breakout level along with 7.91. We need to break out past these levels. And if we do so, we could set up a 5-wave structure, right? So rather than just an ABC correction wave, if it turns into a 5-wave structure, then we could be getting a breakout of the pattern, right? Because the overall pattern would have your A wave down, an ABC correction up, and then a larger C wave to the downside. If this turns into this green 5-wave structure right here, then what we would look for is a small pullback, an ABC back, and then a 1, 2, 3, 4, 5, potentially taking us up to the gap fill, right? So Let's break this down first so you don't get too confused, and then we'll hop into that. Okay. So, we're zooming in on the chart here and take a look at what we've got. Okay. We had our 1, 2, 3 up. We pulled back. That could be our wave 4, right? It's very possible that that was the beginning of a wave 4, and we're trying to start a wave 5. Now, this wave 5 needs to come above our major retracement level of 791. Remember, take a look at what we did in the past over here. We came down, we retraced up, we had a healthy retracement to our 3 retracement levels, and then we got rejected and ultimately started heading back down lower. So that pattern could repeat itself, but these are the necessary steps that we need to do to break out of it, right? To spot a reversal, you need to have the move to the downside, and then you need to ultimately break through those retracement levels. And once you break through those, then you have the potential of making a high and then a higher high somewhere up here for the potential gap fill, right? Now, it doesn't mean we're going to fill the whole entire gap at once. Over here we filled a little bit of the gap, and we ended up reversing. So we may do something similar, but if this turns into a 5 wave structure to the upside, what you're going to get afterwards is you're going to get a small pullback, right? So we would get like an ABC down. Okay, we would get something like this. We'll turn this to red real quick. So this would be our correction, right? So we have the move up, we have the impulsive move to the upside, we get an ABC correction to the downside, and then from there we would get our 5 wave structure to the upside, right? We'd get a 1, 2, 3, 4, 5, potentially taking us to start filling this gap up. So that's your bullish scenario right there, okay? And that's everything that needs to happen. We need to break out past our major retracement level. At that point, we can expect some type of a pullback, but ultimately you'd want to hold above these 3 levels and flip them to support from resistance. And once you flip prior resistance to support, then you have the potential for another impulsive move to the upside. Okay, so that's your bullish scenario right there. But don't get clouded and don't forget about the bearish scenario. Okay. We need to keep that in mind. This thing has had a lot of bearish structure. If you take a look, we are getting a double bottom and we got a nice bounce off of the double bottom. We have a low here, we have a low here, and that's a textbook double bottom. And this could turn into a little bit of a W pattern, right? So it would look like this if we potentially come all the way up. Now we need to be cautious if we get a triple top at this level, right? So take a look. We've already made 2 tops up here, 1, 2, okay? And if we come up to these levels, then that's why I'm saying that most likely we're going to get some type of a correction down. You'd look for an ABC to the downside, and then, find support and continue your 5 wave structure to the upside. Right now, how can you spot a potential crash, and how can you tell if this, larger bearish pattern, this ABC down, is potentially going to play out? Well, you want to look over here at your MACD. All right, so we're going to zoom out a little bit and just show you guys how useful the MACD sell signal is. Okay, so if we zoom in, okay, and come over here to the past, what we can see is that once we got a MACD sell signal right here, which is going to be this blue line crossing below the orange line. When it crosses below the orange line, that's a MACD sell signal. We got the MACD sell signal up here, and then we had a sharp move to the downside. Same thing happened over here. Okay, we got a MACD sell signal right here, and then boom, sharp move to the downside. Even more recently, we got another MACD sell signal. We zoom in on our MACD so you can see it a little bit clearer. And what do we get right at the end of our ABC structure up? ABC, this was our corrective wave, our retracement wave. What do you see? We got a MACD sell signal, and then we pulled back to our support level of 540, and that's when we got that double bottom. Okay, so you need to be cautious if this blue line crosses below the orange line. That could signify that, hey, this was an ABC up versus a 1, 2, 3, 4, 5. And we could be rejecting our major retracement levels right here to come back down lower and hit our bearish price targets. Okay, so that's it for today's video. Hopefully you understood. Hopefully you followed through. I know this video was a little bit technical, right? We kind of went over a lot, but hopefully I explained it in an easy to understand manner. If you thought so and you did, I'd appreciate it if you smash the like button and subscribe to the channel. Don't forget, I do those viewer requests every single week. So if you want to see your token, your cryptocurrency, your stock, your bond in the next video, all you got to do is comment down below and I'll be happy to cover it for you.